Have you talked to your financial advisor or somebody in your life who you trust about money matters, about Bitcoin, and had them stare back at you like you had a second head growing out of the side of your neck? If you answered yes to that question, the good news is you're not alone. The reason why is that traditional financial institutions and traditional financial media have had a really difficult time understanding Bitcoin. And if you don't understand Bitcoin, what it is, what it does, then you're going to have a really difficult time understanding why anyone would want to own it, or how they might think about building a portfolio that includes Bitcoin. Because if you don't understand what Bitcoin does, you're going to have an impossible time understanding how it compares to other things you might own instead. Our guest this week has, over the last couple of years, built some of the world's best comparative analysis tools for looking at Bitcoin side by side against things like gold and real estate. Raphael Zagury is the Chief Information Officer at Swan Bitcoin, and prior to joining Swan, he was a career Wall Streeter. So he's somebody who has a unique experience and background in terms of the way he thinks about asset allocation and portfolio management. And our conversation today is going to leverage on some of the insights that helped him create those tools to give you some insights into how the top minds in the space are thinking about what Bitcoin should look like inside a portfolio. I'm Scott Dedels. I'm the CEO and founder of Block Rewards. And part of our mission in bringing Bitcoin to the workplace is helping people understand why it will help them. So if you're interested in learning something about how the top minds analyzing Bitcoin think about Bitcoin in terms of where it fits in a portfolio, stick around. This one is worth the hour. All right, welcome to another episode of the Block Reward podcast. I'm super excited about our guest this week, who is, in my opinion, one of the best minds in Bitcoin and one of the best analysts you'll find for Bitcoin information and signal. We are joined by Raphael Zagury, who is Chief Information Officer at Swan Bitcoin. Rapha, welcome to the show.
Thank you. It's a pleasure to be here. Thanks for inviting me, Scott.
For our guests who might not necessarily know you specifically, you have a Wall Street background. I wonder if you could just tell us a little bit about your history before you were arrived at Swan.
Yeah, absolutely. Very, very quickly, not to bore everybody with the story, but yeah, I worked most of my career in Wall Street. Well, people don't hold that against me, but I was born and raised in Brazil, and then in 2001, I went to live in the US, to get my MBA. And then after graduation, decided to stay in the US. What in the beginning was supposed to be just a couple of years and turned out to be 16 years. So end of 2016, I moved back to Brazil. And in the US, I worked mostly in the financial services industry. So I work in some large banks like Goldman, Merrill, Deutsche, lot of things, but mostly on the trading side. So traded a lot of derivatives, covered a lot of ultra high net worth clients, a lot of foundations, endowments. It was a lot of fun, but Wall Street, changed a lot from when I got there to when I left, particularly after, the 2008 crisis. So 2016, I came to the conclusion it was time for me to move on, do something else. And being originally from Brazil, it was time to come back home. So when I got back here, I started two companies. I started a boutique investment banking company focused on M&A. Couldn't get away from financial services. But I also started a lending Fintech, which was, I think, it's still related to finance, but it was more on the technology side. One thing about me, I've always loved technology. Been coding since very, very early age. Always did some coding on the side as a hobby. Contributed when I was an anon on Twitter. I contributed to some open source projects out there. Contributed to Spectre. Actually wrote their first API. Coincidentally, Spectre ended up being part of Swan, but this was even before all of that. And when I went to the Fintech, I started getting closer and closer to other technology fields, and was already somewhat in Bitcoin. Exited that company in 2022 and was thinking about, okay, so what next? What am I going to do? And decided to dedicate pretty much, all my time and effort and more because it's been taking a lot of time to Bitcoin. And then I looked around and said, okay, so if I want to, initially I was just on Twitter, writing always some articles, some analysis, different things. But very quickly I found out that doesn't scale well. And So I decided to join Swan. I, literally sent a DM to Corey, like, Corey, I know what you guys are doing. I love the brand, love, seeing what you're doing for Bitcoin. We exchanged a lot of messages in the past, whenever the yield platforms were, were raising, right? And we were very critical of the BlockFi, Celsius and the like. I started Swan about 18 months ago now. And it's been a hell of a ride, man. I tell you, like, all my experience, I would say this is probably the most exciting job I've ever had. It's super, super interesting.
Yeah, for people who aren't sort of living and breathing the space every day, the velocity of what's happening in Bitcoin right now is absolutely insane. It's so exciting. You've talked you've talked a lot about how being from Brazil and returning to Brazil was an experience that helped you really understand Bitcoin and why it's important. But could you maybe just talk a little bit about those insights?
Yeah, I joke that it's super rare to find, and I think actually about writing something about this because I think it's important. It's very rare to see people at my age group that really get Bitcoin, particularly come from the financial services, right? So if I go, and it's changed, I think the ETF has changed things, but up until, I would say, like 9 months ago, a year ago, I wouldn't talk about Bitcoin with most of my colleagues, right? And I think the reason that I got, and it's lucky, right? I was just, I was exposed to the right mix of information that you need to, I think, to really grok Bitcoin, or at least understand basic enough to see the value in it. And one of them was being born and raised in Brazil. And that definitely made me question, what is money and how money really works. And I'll give you like a couple of stories. Like growing up in Brazil in the 90s, we had hyperinflation. Hyperinflation, it's not like 10%, 15%, right? We had periods that we had 10% a month of inflation, right? So money is like literally we would get the bills and the bills would become so worthless that you go to the bank and what they'll do, they'll stamp 3 zeros on the bill. So you have a dollar bill and it's literally a stamp. They stamp it would be 3 zeros. So a dollar bill became $1,000 bill or cruzeiros or whatever it was. So yeah, I mean, if you look around on eBay, you can still find some of these old Brazilian bills with the stamp. It's something else. But growing up on that kind of world made me realize very quickly that money absolutely can be debased. For me, actually, it was the norm that money was always debased. Right? And there's some crazy stories. Like I remember what people would do, everybody would receive their paychecks, right? And for some reason, in Brazil, the 31st is when everybody gets paid and all that. So the 31st at night, the supermarkets were packed because people didn't want to wait. They would receive the money. At that time, you didn't have, nothing electronic. We literally go to the bank, get the money out. So there's like these huge lines in the bank to get the money out, right? Then everybody would go to the supermarket and buy as much as they can of stuff because, if they just held the money for a few days, the money would be debased and would be worth less. So it created all these kind of like crazy stories. I would go to the supermarket with my mother. At one point, I remember it was so crazy that the prices were changing so quickly that literally there was a guy, just replacing stickers on food and all day long, right? There's like, these guys just going around and changing the price, So you go around and the second time that you come around, it's another price, right? So my mother would tell us like, oh, keep an eye on him whenever he is. You just run before him and grab the stuff that we need so that you can get it cheaper. So again, money completely loses, its function of being a reference for price, right? So I think that was, super important when I, answering a question. When I saw Bitcoin, later on to really see the value of it, was one thing. The other thing, again, this is why I say that you just need to be lucky enough to be in the right places at the right time. But when I went to university in Brazil, my university in Brazil did something that, up until now, I haven't seen another university that does that. But we had like on economics, so I took an economics class, right? So macroeconomics, for example, we had 2 macroeconomics chairs. We had one that was Keynesian macroeconomics and another one that was Austrian school macroeconomics. And the 2 professors would debate themselves all day long, right? Which, we were reading Mises and all of that back in the 90s. So partially probably because, Brazilians were already very aware of the problems that central banks had. And, we were always looking for potential alternatives. And then the third piece, I think so. The first one was being born in Brazil, seeing money being debased. The second was just my university education, I think helped me a lot. And then the third one is what I said. I always liked technology. So Bitcoin, it was like the all these three worlds colliding into something that, for me, just, I remember the first time that I looked at the code and I realized that the 21 million cap was really there because of the way that the halvings work. And for that and looking at the difficulty adjustments just made me look at it and say, this thing is brilliant, right? This has potential to really change the world. And it took time also. I think with everybody has their own experiences. I had mine as well. But yeah, this is why I think Bitcoin at the end of the day.
Yeah, and you're an anomaly a little bit in terms of, I think that people who really understand the traditional financial institutions and products can often be disadvantaged because of, that on its own is sort of a paradigm people tend to use to make sense of the value of assets, the relative value of asset classes. It's like these are pretty ingrained ideas so it's admirable when somebody with a big understanding of legacy finance can shift gears and make sense of it.
Yeah. For a long period of time, I questioned myself. Like I looked around and, 2015, I tried to present Bitcoin to Deutsche Bank, to the investment committee there. And it was a disaster. And and if there's one thing that I think a lot of people from Wall Street have is conviction. They'll say a lot of things with a lot of conviction, which makes you question yourself. Like maybe I am the crazy one, and maybe I shouldn't be looking to this, right?
Yeah, maybe we should just have money that becomes worth less and less forever. How do you conceptualize it? What is Bitcoin in your own words?
Yeah, I think Bitcoin, for me, it's the best monetary fuel cell that was ever invented, right? I think if we think about money, right? Why do we need money? We need to store the fruits of our labor somewhere, right? We go out and, the doctor goes out, sees the patient. A lawyer goes out, has his clients, gets paid, right? And then a plumber goes out, does his service. And then at the end of the month, we have, hopefully we're all going to have consumed part of what we earned, but, we're going to save something. Right. And I think money should be the fuel cell to store the savings of your fruit of labor. Right. Unfortunately, I think one of the reasons that, I think Bitcoin is the best form of money that we have is that it just can't be arbitrarily debased by other people. Why I was actually telling my daughter this yesterday because we were talking about money and we ended up talking this for her. She's 16. For her, immediately, she got it when I said something like this. I listen, for your father and you and everybody else to get money, we have to work, right? I have to be away from you. I have to spend time doing other things, right? I have to invest. There's sacrifice. There's risk. There's all of this. And then I get money, right? For the government to get money, what do they need to do? They just push a button. And it's like, no, they can't push a button. That's exactly how money is printed. They push a button and they not only they get their own money for free, but by doing that, they make your money be worth less than it was before because there's just more money out there. And she immediately got it, right? And then I said, so this is why, I think Bitcoin is so important because it's the first money that it doesn't matter. The government, if they want to acquire Bitcoin, they have to do it the same way we do. They have to go out there, either mine it and spend, power to do it and, infrastructure and all of that, or buy it in the market. There's no other way, right? They can confiscate, which is, it goes back to the same problem. But also with that, good luck, because, if there's one thing about Bitcoin is that it's much harder to confiscate as well. And, it was good to see that she immediately got it, the importance of this, because again, I think we lose in track when we talk about the Wall Street guy. We always think about, huge complexity of models and all of that. And it's much simpler than that at the end of the day. Just Bitcoin is the best monetary fuel cell that was ever invented. And, in the process, it's much more ethical than the other alternatives that we have out there, right?
It's amazing to think that a young person could grasp something in minutes that a boardroom full of Deutsche Bank executives couldn't in however long your presentation was, but that's the reality of where we are.
Yeah. they will, to your point, just going back to the last question as well, they will try to trace parallels to things that they understand, that they've seen, right? So the first thing they will ask is like, okay, so what are Bitcoin's cash flow, right? Like, oh, there are no cash flows, right? So does it pay interest? No, it doesn't pay interest, right? And that for them is very hard to get across their mindset. You can get there. Like, I've learned with time of how to show other valuation metrics, other paths that, they will see that there's value in Bitcoin, but it's not obvious for them. It's something different. But Scott, I've seen this, through every time that Wall Street got disrupted with new technologies. This always happened. Like happened in the internet when the internet came up, right? And people didn't think that the internet was going to be so important as it was, right? It happened when, internet companies started exploding. I remember talking to somebody about Google right before Google was going to do their IPO and say, oh, we gotta participate in this. And the answer I got back is like, oh, this is the yellow pages it's just digital yellow pages, right? Why would I buy this? People are still going to receive the yellow pages for free at home, right? The yellow pages were catalogs that in the past you would receive at home with the phone number of everybody, right? So for them, Google was the yellow pages of the internet. And this wasn't one person. This was, I would say, probably close to consensus around what the Wall Street guys would say, right? And again, it's not because people are stupid, just the opposite. They're very, very smart people. Some of the smarter I have worked with at Wall Street. It's just that their framework, their mindset is looking at the completely different way, right? A completely different direction. So it becomes harder, I think, for them to see it in this way. And thankfully, right? Because I think for Bitcoin to succeed, it was also super important, right? When we look at Bitcoin, there are all these small things that happen, right? And then when you look back, you're like, yeah, of course, this was important. But one of them is, imagine if it was obvious for Wall Street, right? And Bitcoin, right after Satoshi launched it, Bitcoin became obvious for BlackRock, right? That would have been a problem because instead of having the bottom-up distribution as we had, it would have come much more from the top, right? So it gave an opportunity for small investors, individuals, people that were really, connected to that really understood money to buy it first. And that's still the case now, right? We still don't see large institutions really buying into Bitcoin. So to have, large sovereign nations having Bitcoin in their balance sheet, this is all going to happen. And we are, people say this a lot, which is true. We're all front running all these guys, right? Which is great.
Which is also, I think, on its own, one of those things that makes you question your own sanity. Like, is it really possible that ordinary people are front running the biggest institutions in the world? And yes, but it does feel that one can keep you up at night sometimes.
In mind also that the institutions are much slower to make decisions, right? And that when I mentioned in the beginning that I left Wall Street because of Wall Street that I was, in 2016 was not the same that I got in 2001. A lot of it is because the decision process got crushed with a lot of regulation, a lot of changes. Banks pretty much, became, people don't talk enough about this, but the banks are nationalized after 2008, right? Government is really super involved in the management of all the banks through regulatory agents and all of that, right? Which made it much harder for banks to become, super nimble. And when I graduated, the dream of everybody, that was top of their class was to go work for a bank because that's where, we put our brains to work and to really think about different things and to model, right? And really be, as I said, kind of like the forefront of development of everything. That's not the case anymore. And, the young don't want to go to the banks and they shouldn't, right? Because it's much closer to a utility job, much closer to a government job than it is to, somewhere that you're really going to put your brain to work, right?
Yeah. I mean, in Canada, the banks literally, the government says, freeze this person's bank account. Yeah, they have totally merged. It's just an optics thing. Have you been surprised by the performance of the volumes of inflows into the Wall Street Bitcoin ETFs, in spite of how poorly understood why you would own Bitcoin? Like, so these asset managers now have this thing. Probably very few of them. I think some know what it does, but
I think it's been surprising on the upside in terms of the numbers that everybody was expecting. But I think when you put in perspective, we haven't seen anything yet, right? And I'll tell you why. And you kind of touched on a couple of these points. So most of the companies, most of the banks, right, the way that they will do asset allocation is, so let's say, for example, you're a client, you go to Merrill Lynch, right, to open an account with Merrill Lynch. So you're going to find a financial advisor, right? You're going to sit down with the financial advisor. The financial advisor is going to put a plan in place for you. They say, okay, Scott, you're young and, you don't have a lot of liquidity needs in the short term, but so we're going to put you in stocks and we're going to put you in bonds and we're going to allocate through these funds here. Most of the financial advisors, and this of course varies bank to bank, when they get to a bank, they get pretty much a playbook of how they're going to do asset allocation, right? And that comes from the top down. There's a CIO in the bank. So the CIO will have all these model portfolios, right, that they'll publish every month. So they're going to say, okay, here's a model portfolio for somebody that, it's moderate. Here's one for somebody that it's aggressive and so on. And in some cases, it will be models, literally models that you're going to put all this information about the client, right? And it's boom, it's going to spit you out an asset allocation. Leave aside the fact that, a lot of the products that are going to come in are probably products from the bank that the bank's making a lot of fees, right? It's a complete separate discussion, which creates a natural conflict of interest with the CIO office. But let's leave that aside for a second. Let's just assume that everything that they're doing are the best assets that you could get, right? I still keep in touch with a lot of the CIOs in some of the top banks out there. With very, very, very few exceptions, none of them are even thinking about Bitcoin, even after the ETF, right? Which means that in terms of the asset allocation that it's coming to the clients, very few clients are seeing this on a fully distributed basis, right? Of course, we're going to have the financial advisor that has been orange pilled, that understands the value of Bitcoin, and he's going to take the initiative to tell his clients to buy Bitcoin. But we're talking about, a fraction of all the financial advisors out there. Because another thing to keep in mind is that when a financial advisor is doing something like this, he's going on a limb. Because if this goes wrong, and the client comes back to the bank and says, but the financial advisor ABC told me to buy Bitcoin and it blew up on my face, he's going to lose his job, right? So that hasn't happened yet. It is going to happen. As I said, there are a couple, I was actually very surprised a few weeks ago. I was having a conversation with somebody at one large bank. And I said, the CIO of your bank doesn't like Bitcoin. And the person, no, she changed her mind. Take a look at her latest publications. And I opened it up and, she was talking about Bitcoin and wasn't telling to put in her portfolio, but she wasn't negative anymore. Just saying, if clients want to have it. So it is changing. I think the ETF is, super important for that. And it is going to become, I think, an asset in everybody's portfolios. But it's been super early. If you look at the volumes, I think we have something like 13, 14 billion that got into Bitcoin ETFs for in net flows, right? That's nothing, right? I think if Bitcoin really becomes what I think it can become, and we can talk about that, and it demonetizes, all these assets out there that took monetary premium and people are using it as savings technology that shouldn't be using it as savings technology, right? As we were saying, the problem of what we were seeing of people trying to find a place to store their capital is that we created all these Frankenstein assets out there that, they shouldn't be storing capital, and we're using them to store capital, like real estate, right? Real estate should be something that, people shouldn't be buying a second or third home, a fourth home to go out and do Airbnb, right? This all became assets that, are being used as a store of value, as a savings technology. And it comes with consequences because it becomes much more expensive for people to really afford living, right? You're using something that shouldn't be used for this purpose. And again, it creates consequences. And I think as Bitcoin demonetizes all of these assets, we're not talking about, billions. We're talking about, hundreds of trillions of dollars that are going to be demonetized along the time. Is that going to happen in a year? No. Is that going to happen in 5 years? Part of it is going to happen in 20 years. Absolutely. I don't think we're going to be seeing any other form of money that can compete with Bitcoin in the long term. But up until then, we have to go through the steps. So it's a very long way to answer your question, which is, I think the volumes that we've seen have been surprising on the upside from what everybody was thinking, but they're still super, super low compared to the potential, because as soon as the financial advisors really start putting in the portfolios, as soon as, this is broadly distributed across not only the US, but across the world, right? we're going to be seeing Bitcoin is going to become an asset that is going to be in every portfolio, right? Every single asset allocation is going to have a percentage of it of Bitcoin. Some are going to be, 0.5%. Some are going to be 30%, 40%, or even more, right? But every single portfolio has to have Bitcoin as an asset to the portfolio. And I'm starting to see it shift that, on the client side, their clients are asking more and more about, but my financial advisor doesn't talk about Bitcoin. Maybe he should be telling me about Bitcoin. And for these financial advisors, it was a problem for them to talk about Bitcoin. It's going to become a problem for them not to talk about Bitcoin. And at some point, they're actually going to be breaching their fiduciary duty by not telling their clients about Bitcoin and the benefits that it could add to a portfolio. Right?
Yeah. And if they aren't already, in hindsight, I think that it's such an interesting thing. Bitcoin gets compared to other asset classes. And so it's like, well, it's already had this big run. It's already tripled in size since whenever. It's approaching the size of Apple, and all of these frameworks have all these built-in biases that really ignore, like what you were talking about, this concept of being a fuel cell. And so I'm fascinated by what's playing out already. And I'm glad you mentioned real estate. There have been some really high profile, like $1 billion write-downs of, real estate in San Francisco, commercial real estate in San Francisco. And I guess the question here is, as Bitcoin becomes a more desirable asset in a portfolio, there's only so much of a pie in a portfolio. And these other things that have been financial fuel cells are going to start potentially looking like less of a good fuel cell than this other thing that people still are just measuring in terms of how much it goes up. And so, I think about REITs, commercial real estate and REITs have traditionally been something that large asset managers have held as a go-to. So it's not like it is sort of a zero-sum game. Because if you talk about how you think Bitcoin might re-level the pecking order of asset classes.
Yep. Long term, in terms of real value, right? If you look at the real... Take aside, inflation and debasement and real purchasing power, it is a zero-sum game, right? It's close to a zero-sum game. In the short term, it's not. And I'll walk you through why I think it's not, and why, when I look at some of the price predictions of Bitcoin, I think they're all, way, way too low. So you mentioned, let me go through stocks first, because you mentioned Apple. I think that's a good one. And then we'll go through real estate as well. So the stock market, right? If you look at the stock market, a lot of people that invest in the stock market, they're not investing in the stock market because they really understand the stocks, because they really understand the companies, because they really understand management, because they really want to have a piece of that, right? Most of the investors, they'll buy the S&P, which is, they don't even know what's inside the S&P, right? It's just a passive way of them getting access to the stock market. And the reason why people want to do that is the same one that we just mentioned about real estate. They're buying it because they think that, stock markets in the long term are actually going to be a good store of value. That has been true in the US. It is not true among, most of the equity markets in the world, right? Look at the Euro stock. Again, get a 10-year chart of the Euro stock and compare it to the S&P. And you see that, and most people don't believe me when I say this, and they should go and just this chart. You can get it on Google. Euro stock pretty much didn't go anywhere in the last 10 years. It's flat. It's up marginally in the last 10 years. Look at the Bovespa in Brazil. It's been down in dollar terms, right, in the last 10 years, right? The S&P has this benefit that it became, again, the savings technology for equities in the world. And because of that, it has captured a lot of monetary premium. I think this is evidence that this monetary premium exists, right? Just by seeing, are U.S. companies better than the rest of the world? Yeah, on average, I would say that the U.S. company is better than the global company, right? But does it justify, having had, thousands of percentages of appreciation in the last 2 decades compared? Absolutely not, right? An oil company in the U.S. is the same, it generates kind of like the same product that an oil company. Well, maybe not in Brazil because it's government owned, but you get the point, right? The end product should be very similar. That created, I think, it creates even more distortions because then the U.S. companies have access to capital markets in a different way the rest of the world has, right? And it creates a cycle that feeds itself. I think Bitcoin, is going to demonetize part of that premium because, again, people are just investing there, not because they believe in the companies, not because they believe in the stock, just because they need to save the fruit of their labors, right? The same thing has happened with real estate, right? REITs, I think, are the ultimate way for people to get access to, what they say it's a broad, diversified real estate exposure, right? But at the end of the day, it's still real estate, right? It's still having to go out and you have to have an asset and you have to buy an asset. And on top of all of this, everything I told you would already be a problem if the monetary base, was not growing as quickly as it is, right? And if you look, this is not, of course, since, the COVID to now, money production just completely exploded out of control. But this has been the case for the last 3-4 decades, right? We see that there is always excess liquidity somewhere. And I think the way that you can see that that's happening is just look at all these different asset bubbles that keep happening in different places, right? This is money chasing performance, money chasing savings, right? And that creates, again, all these dislocations in different markets, right? And real estate, right? Real estate is a $320 trillion market, is massive. I would say, and this is my estimate, right, that around 50% of that market value in real estate, it's premiums, monetary premiums, real estate being used by, for some other reason that it's not for you to live in it, right? And I think that's a conservative estimate. In the US, for example, more than 50% of the residential properties are not owner occupied, right? So that gives you an idea. If you put on top of that, that there is massive leverage on real estate because, you're basically putting 10% to get exposure to 90, right? And if you put it, and again, governments break everything, right? The fact that in the US, for example, you can get a tax deduction of the interest that you pay in the mortgage, right? All the incentives were in place. Good intentions, right? Because the idea is, everybody should have a home, everybody should be able to afford a home, right? But by doing that, you're creating all these other consequences, right? That I think they were unintended, but they were created anyway, right? That the problem is if you actually look at the new generation, and don't need to go far, right? We hear this all the time. You can't afford a home, right? People can't find a home to live because the prices of homes are completely off from what you are earning, right? So not only your money is debased, but the asset on the other side that you need to consume is also getting more expensive. You're getting screwed on both sides, right? So that has been a problem. So fast forward to Bitcoin, and this is your related to your question of is it a zero sum game? How is this going to how we're going to live through this transition, right? Because it's already happening, right? But how is it going to happen going forward? And by the way, for all of this that I'm telling you, I actually wrote, there's a website that I've created. It's called nakamotoportfolio.com. And one of the models that I've created, which is, I call them models, but for me, they're more frameworks. And I think it's just to give you an idea how to think about things. There's one that is called the Schrodinger model. And this is, what I just walked you through is exactly what the model does, right? It will look at all these asset classes. You put a probability of what you think these asset classes are going to be demonetized by Bitcoin. Could be 1, could be 2, could be 3. You change the values, go there, you can actually have web apps that you can slide and change the assumptions. You say, I think this is going to happen in 5 years, 10 years, 15 years time. And with that, it's going to say, okay, if these are the probabilities you think, if these are the assets, if this is the monetary premium, by your assumptions, Bitcoin should be worth this amount of money, right? And one thing you see very quickly is that if Bitcoin really captures, even with very small probabilities, right? And even with assuming very conservative monetary premiums in all of these assets, and even assuming that it's not going to happen today, it's going to happen in 10, 15, 20 years time, you see that Bitcoin's price is like significantly underpriced at where it is, right? And this is the first model that, I actually was able to put in front of, I think, some Wall Street people, and they look at it, and because I start the office, okay, so you think Bitcoin is worthless, right? But it can't be zero, right? You got to have some probability that so if you have 100, universes out there, and how many of them you think Bitcoin is going to survive? And they say, maybe 10, right? I say, okay, so you think there's a 10% chance that Bitcoin is actually going to survive? And I plug their numbers into this model, right? I say, okay, given what you're telling me, right? It's not what I'm telling you, but given what you're telling me, Bitcoin should already be worth, 10x, 15x and what it is today. So, and again, I encourage people to go to the website, change the assumptions and see how it plays out. Now to the final point, which is how does it, what does this really represent to Bitcoin price? And the answer is we don't know. And I'll tell you why we don't know. When we look at the Bitcoin price, right, $69,000, which is what we have on the screen right now, right? What that is a representation of where the marginal price is. So where the next buyer and the next seller are coming to an agreement to exchange value and to settle a transaction, right? If I tell you, Scott, go out there now and buy, 10 Bitcoins, you're probably going to be able to get somewhere very close to the price that we have right now, right? If a corporation comes in and immediately says, listen, I absolutely need to buy Bitcoin, let's say an ETF, right? An ETF has the flows during the day and say, I absolutely need to put Bitcoin, as my collateral because, my clients just deposited capital. I need to buy 10,000 Bitcoins. I guarantee you that the price that you're going to get for those 10,000 Bitcoins, it's not 69,000. It's going to be higher than 69,000, right? Because you start eating through all those bids, right? And what you'll see is that as that happens in a broader, longer term, and when we think about price, it's a short term, right? But think about, a scale that it's larger, like a week, a month, a year. And the same dynamic happens, right? You have people going out and accumulating Bitcoin, and you have all these people looking to sell. And in the short term, you're going to hit the traders, you're going to hit the market makers, you're going to hit the OTC desks. And for small amounts, again, these are going to satisfy you. But if you really, really need to buy, then you're going to start going into the hodlers, right? And when you start going to hodlers territory, people like you, like other Bitcoiners, the value that they see in Bitcoin is not 69,000, right? It's significantly higher than this. Good luck to these corporations when they try to when they need to, because they're not going to try, they're going to need to, right? To take the Bitcoin out of the hands of hodlers. Because it's not going to settle at 69,000. It's not going to settle at 100,000. It's not going to settle at 500,000. In some cases, it's not even going to settle because, some people have looked beyond the matrix and said, no, this is the standard. There's no price in which I would exchange my Bitcoin to fiat, right? Because this is the first real money that we have. So depending how quickly that dynamic happens, price could explode, very quickly. And what does that represent? Impossible to know because, there are market dynamics and so many variables here that I think are just impossible to predict how they're going to play out. But listen, this happens on the downside as well, right? You don't need to go too far. Just look at what happened with FTX, right? FTX dumped a lot and, a lot of people dumped a lot of Bitcoin in the short term very, very quickly. And unfortunately, get surprised that, there are no buyers out there. And, the price just eventually in the long term, things equalize and get back to what fair value is. I think we're still going through that process. But yeah, in the short term, price can do all sorts of crazy things. This is one of the reasons why, as CIO at Swan, a lot of people ask, so what's your price prediction? I don't have price prediction for Bitcoin. I think, anybody that has a price prediction for Bitcoin is definitely going to be wrong. And, probably hasn't been around long enough to know that, it's just impossible to predict a price in a nascent technology that it's still, demonetizing other assets. And that's going to happen for a long time. And just to conclude there, this is also why people talk a lot about this. Oh, Bitcoin is too volatile. I can't put it into my portfolio. We should all embrace volatility because volatility is the direct consequence of us seeing, that we're still very, very early in this market. And go back, as I said, to the Nakamoto portfolio app, the Schrödinger model that I said, and just change the probabilities by a couple of percentage points one way or the other, and you'd see what happens with the price, right? So if the probability of Bitcoin really taking over real estate is not 10%, it's 20%, price is, significant. It doesn't double. It's 10x's from where it is, right? Or more than that, right? So ultimately, this is the reason why we see volatility, and we should embrace it because it's it's just showing that there's no consensus yet on where those probabilities should be.
Hey, everybody. I'm thrilled to announce that Block Rewards has come on board as a sponsor for the 2024 Canadian Bitcoin Conference happening in Montreal, May 16th to the 18th. It's going to be a great event with an unreal lineup of speakers, and we couldn't be more excited about being involved. If you're thinking about going and you don't have your tickets yet, you get 10% off of your pass using the code BLOCK2024, and that's all capital letters. And you can get those tickets at CanadianBitcoinConf.com. Hope to see you there. Playing around with the tool in advance of this conversation, and I can't remember the exact parameters, but one scenario that it kicked out gave me a 97% chance that in 10 years, the price of Bitcoin be 37 million US. And the assumptions weren't really that wild. It was, that one kind of shocked me. The one model that I feel fairly confident is definitely wrong is something called diminishing returns, which is the idea that every Bitcoin cycle, the total increase from top to bottom is going to shrink every time. And that's kind of the only one that I'm like, there's no way this process will continue to unfold that way.
Scott, this is the beauty again of having lived in Brazil. The Brazilian real, or the dollar, I should say, compared to the Brazilian real, never had diminishing returns, right? The chart that you see on the Brazilian real, to go back, to the early 90s, and get a chart of, and it wasn't the real, it was the Cruzeiro, which was, and that's the other thing, currencies even change names. These happen, right? So take a look at the Brazilian currency through the 90s, and what you see is something that, starts like this, and it's diminishing returns. And then all of a sudden, it does this. So it's a curve like an S curve, right? And this is why when I look, if there's one, I wouldn't call it a model, but if there's one chart that I look at, I say this is probably where Bitcoin is going, is the stock to FOMO, chart, because I think that's probably what's going to happen. Because at the right side of that equation, Bitcoin became really, the ultimate asset for store of value in the world, and as it does, remember, you're measuring Bitcoin against fiat. Fiat is in dollars, and they're all losing their value. They're going to zero, right? As it goes to zero, that chart's not going to have diminishing returns as it goes to zero. It's actually that chart's going to go close, it's going to tend to infinity, right?
Yeah, it's kind of like watching if you're sitting in a plane and then the plane next to you starts moving and you can't tell if you're moving forwards or backwards, and both planes might be moving. It's sort of this disorienting thing of like Bitcoin's appreciating while the fiat unit of accounts we measure it in are also depreciating. And you have another great model that I do want to talk about very quickly that you've used with Nakamoto Portfolio to assess how much Bitcoin pensions should be looking at holding. And because it's a Canadian show, you did do a deep dive episode that we'll include in the show notes talking about Ontario Teachers Pension Plan, which is one of the highest profile, largest pensions in Canada. Could you talk a little bit about that model and maybe how you think pensions should be thinking about Bitcoin?
Yeah, a couple of funny things. So if you go to the show notes, right, and which are also in the Nakamoto Portfolio, we actually recorded a show with an asset allocation overview for the Ontario Teachers Pension Fund, right? And we recorded this back in June, middle of June of last year. And what we did is we got their portfolio, their asset allocation. We input it in the Nakamoto Portfolio. We have, as you said, we have a tool that you can put your asset allocation, and you can play around and say, what happens with this portfolio allocation if I put 1% Bitcoin, 5% Bitcoin, 10% Bitcoin, and you can see historical returns. And you can also make simulations to the future and see what would happen, given assumptions that you include on that portfolio. So we did that. We went for that. First, we look at their portfolio. We saw what they have, right? And then, of course, you see things like they have a ton of real estate, they have gold, they have a ton of hedge funds. They have a ton of venture capital funds, right? Have all these assets that are, I would consider, much riskier than Bitcoin. And of course, no Bitcoin allocation. At the end of this show, and this, of course, is hypothetical, we have nothing to lose from it. But just for fun, we actually made a recommendation on what we thought would be, a good starting allocation for each of these pension funds. And for the case of Ontario teachers, we said anywhere between 1% and 2% to get started would be appropriate, right? That 1% and 2% that we suggest, Bitcoin was at $30,000 when we made that suggestion. So there you go. They have like 130% return on Bitcoin. So that 1-2% would have become almost 4%, depending if we actually allocated everything to their portfolio, which makes huge difference, right? They're talking about close to $250 billion fund, and that would have made a difference for a lot of pensioners out there. But forget all about that. Just on a fundamental level, go back to what we were discussing. And if you think Bitcoin really has the ability to become the monetary asset of the in the long term and will be the best, again, and this is all based on probabilities, right? Even if you think it's a small probability, a pension should definitely have some Bitcoin in their portfolio. Should they have 100%? No, of course not, right? But I can guarantee you 0% is the wrong answer, right? And that's what we did. We just went there. We did the analytics of their portfolio. Go on the website. You can see, what the portfolio was, and you can see how a 1, 2, 5% Bitcoin allocation would have changed that portfolio. It's good to see. I see this all the time. Financial advisors, hedge funds, different players using this tool and coming back to us and saying, I ran the numbers and the simulations are actually showing me this. What do you think? And that's all changing. I think we kind of touched this, but the ETF is super important for that, because for the first time, a lot of these asset allocators, I understand there was a level of, they had to step like 3 levels of complexity to get to a Bitcoin allocation. They had to first understand Bitcoin, second, see how it fits in their portfolio, and third, understand how to custody Bitcoin, right? Getting the first and the second were hard enough, and I had these conversations with they would say, I understand, I see the value, but there's no way I'm going to open, I'm going to give my clients a hardware wallet because they don't get it. They're not going to understand that. I have a lot of risk. The advisors didn't understand any of that. The pension funds managers didn't understand that, right? So I think the ETF cuts that piece. Does it mean that that's where they should be in the long term? Absolutely not. I think at the end of the day, everybody should have, their own custody of Bitcoin in some sort of way, in the way that they feel secure enough, right? Diversified enough. But it's much better to see a pension fund, to see an individual, to see an endowment buy an ETF than don't buy anything. At least they're going to be protecting parts of their portfolio. At least they're getting the exposure, at least. And if there's one thing with Bitcoin is that, as soon as you put your toes in the water and you feel that the water is warm and you start to understand that the price starts to go up, and you start to read more about it, the conviction level goes up very quickly, right? And for you to really understand, it takes a long time, but your conviction level goes up quickly after that. So I think the ETF is, and Lynn Alden says it, I think it's the perfect analogy, that the ETF is like the API connection to the financial world, right? So now they can just get connected to Bitcoin in the same systems that they have. It becomes one line item on the same reporting systems that they have. At the end of the day, for taxes, they don't need to do anything else. For custody, they don't need to do anything else. We're going to have other problems we're going to have to deal with this, when BlackRock has a lot of Bitcoin. But even that, I'm not worried about any of that in the long term anyway. But for individuals and for these, at least now they have an asset they can get exposure to.
Yeah, there's a couple points there thinking about. One is, you have all of these pensions that have all of this money parked in other asset classes, and they all have this responsibility to their own plan members to deliver returns and protect the principal capital in the fund. So that choice is going, the game theory of them watching other pensions do it is going to be fascinating to watch unfold. And the other thing I think about is, this sort of like positive feedback loop for companies like BlackRock offering Bitcoin products. They have the benefit of growing their assets under management as these things outperform. So, of course, they're going to be more incented to include it in different portfolio models and talk about it more, Bitcoin advertisements. So this thing, there's the conditions for this thing to outperform, I think, are also just a lot more ripe than people who don't understand what's happening.
Yeah, the marketing machine of all these ETFs is working for Bitcoin now. Right? Which is beautiful. You asked me something, and when you talked about BlackRock, now I remember that I didn't answer in the beginning, which is, why is it hard, I think, for a lot of people in the financial services industry to really see Bitcoin? And one of the things tell you 2 things here. One of them is that's changing not only because of the ETF, but I think the realization and I heard this from financial advisors, and I could bet that this was one of the main reasons why BlackRock got into the ETF, which is the new generation. It's much closer to Bitcoin. It really understands Bitcoin. And, you have all the old generations coming off guard, and they're kids are coming in, they're taking over the portfolios, right? A lot of these big financial services industries, they are bleeding. This has been a problem, demographic problem for a lot of the wealth management firms for the last 2 decades, and it's accelerating. And I think they're realizing that, if they don't keep up with the new game and they understand that, this is where a lot of the value is going to be in the long term in terms of asset allocation, they're going to be left behind that's happening already. Like a lot of people leaving the banks to open a Coinbase account, a Swan account, whatever it is. Right? I hope they don't open a Coinbase account, but they do, just to, again, participate on this new market that banks traditionally can give them access. And I think this was one of the key things that was on the top of BlackRock when they, on their mind and their planning, when they really need to prepare for the next generation. The second thing I would say is that it's hard when you are on the other side. I'll tell you, like many times I start thinking, people need to learn more about Bitcoin, right? And say you don't know anything about it. So join Twitter, right? To get to Twitter is this mass crowd. It's like when you look at the looking glass, what you see is this chaos, this, monkeys jumping everywhere, people yelling at each other. I don't know if that's good or bad, but it's a reality, right? And I've seen a lot of people say, Bitcoin is, it's just a clown show. I go to Twitter and there's like all these crazy people yelling at each other and they stop there. Like they don't go any further. They don't open, buy a book from Lynn or, something else and watch a video. This is what comes as their first experience. And because of that, they just shut down and say, this is not a professional arena. I don't want to get into there, right? And the ETF changes that also, because now I just tell them, like, listen, if you don't want to listen, it's fine. But BlackRock just wrote all these pieces about Bitcoin. They're going to put Bitcoin in asset allocation for every single client. You should look into that, look beyond what you see in the noise, because behind this, there's one of the best assets that you could ever think about for asset allocation, right?
Yeah. And one person at a time can figure that out. Rafa, this has been such an awesome conversation. And thank you again for coming on. For listeners outside of Nakamoto Portfolio Gauntlet who want to find you or follow you, what's the best way for them to do that?
So I'm on Twitter. So the handle is Alpha Zeta with 2 A's. So Alpha A Zeta. Yeah, you can find me there at Swan as well, doing a lot of stuff with Swan. From time to time, I'm at Spaces. Twitter is probably the best, or X, the best way to find me.
Love to have you on again sometime. And if you're listening and you made it all the way to the end, thank you so much for tuning in, and we hope to see you next week.
Thank you, Scott.
Thanks for listening to this episode of The Block Reward. We're trying to do something different here, creating accessible conversations meant for people who aren't obsessed with Bitcoin. If you found this episode informative and engaging, hit that subscribe button to make sure you stay updated with future episodes. Your feedback matters. We'd greatly appreciate it if you could take a moment to share your reviews and help us with our goal of creating Bitcoin content that is simple and easy to understand. Bitcoin has an important role to play in the future of finance. It will change the way we save, spend, and invest. Discover why Bitcoin offers a game-changing opportunity for forward-thinking employers by visiting blockrewards.ca. Block Rewards' mission is helping Canadian employers implement strategies for integrating Bitcoin into compensation and benefits, supercharge your recruitment and retention strategies, and help your team members plan for the rising cost of living by rewarding their work with the hardest money ever invented. Special thanks to our top sponsor, Paramount Employee Benefits Consulting, Canada's only Bitcoin-forward benefits and pension advisory. For more information, find them at paramountbenefits.ca. Big shout out to Podigy, our production team that makes all this possible, and BMX Escape for producing our music. Bitcoin is an expansive and dense topic many people walk away from early. To Bitcoin enthusiasts looking for that podcast they can share with friends, family, and colleagues, one they'll actually listen to, we hope that is us. The content of these conversations is meant to be provided for information purposes only. Nothing here is investment advice. Bitcoin is a big topic. Be sure to do your own research before making any personal financial decisions. Thanks for listening.